Okay, we are at the top of the hour, so I'll go ahead and get started here. Thank you everyone for joining us this morning. My name is Lynn Voss with Golden Care. I've been here at Golden Care for nearly 18 years. Oh no, it is 18 years now. Um, as part of the marketing team, in terms of helping with quotes, product knowledge, answering questions, supply orders, you name it. I've done it. I'm happy to help. And I support the regional directors here at our office, again, doing everything we can to help support you, our agents, to be successful in the industry. Now, we have been working with Mike Simenstad. Now, Mike has been with NGL for a couple of years. We've had him on for prior training events. He's been in the extended care industry for quite some time. But today, we're pleased to have Mike on to share information on their new traditional long-term care insurance plan, the HonestLTC product. So Mike, I will go ahead and turn it over. And for everyone, we do allow questions to be typed in. So if you have questions throughout the presentation, feel free to type those in. We'll address those at the end. And we'll be sharing slides of this presentation after the fact, as well as a recording. So I'll turn it over to Mike and we'll get started here.
All right. Well, thank you so much, Lynn. And Lynn, congratulations on 18 years with Golden Care. That's really, really impressive. I mean, wow, with one organization and in the same industry. So you and I have, we've seen a lot in this, haven't we?
Yes, we're old timers.
No doubt. Well, anyway, thanks for having me. And today I'm going to talk about NGL's new, it's actually our second generation long-term care product called HonestLTC. So why don't we just get right into it and tell you first where it's available and how the transition is going to be from our current, or I will say I will refer to it as the old product, which is Essential LTC. So Honest launched a couple of weeks ago, February 13th to be exact, in the following 34 states that you see on the screen. They're primarily the compact groups of states, and additional state rollouts will occur as approvals come in. Now, every time we have a new rollout, there will be a 2-week transition from the old product to the new product. And those that want to, for some reason, take an application on the old Essential LTC product, that won't be available, upon the launch of the new product. That won't be available on our e-app. You would have to do a fillable PDF and have it into the NGL home office within 2 weeks. I will tell you that the only reason you probably would apply for the older product is because the new product does not have unlimited benefits. So at least that's what we're seeing. The only Essential LTC applications are for lifetime benefits. So I just wanted to let you know that if you're in a state that is not yet launched for HonestLTC, it really is the last call for unlimited benefits if you're going to create any sort of fire sale activity with the old product. And then once Honest is approved in a particular state, we are doing a guaranteed issue exchange program for recent policyholders. So as long as the policyholder sign their application on May 1st, 2025 and beyond, we are giving that client 60 days to exchange their essential long-term care to the new product without any underwriting. A fillable PDF or paper app is required for HonestLTC, and yes, they do have to complete the underwriting questions, but there will not be any underwriting at all on those for those who want to make an exchange. For those people, NGL policyholders that had their policy before May 1st, 2025, well, it would be like applying for a brand new product. So that is the logistics with the product launch. Now let's dive into the product, right? And I think this is a good time to remind you of, I would say the, key or headline benefits that NGL is known for. And for the most part, we are keeping, I will call the sweet spot plan designs that you may have known in the past. So with that, obviously, is the joint pricing for couples, which is unique in the industry. So a husband and wife, when they have when they both have a policy and they both have their own pool of money, well, it's one premium, right? It's a blended premium for two people, for a couple. And the end result of that is, number one, a really good value when you compare to, some of the other offerings in the industry. And pretty soon I'm going to show you some pricing examples. But, keep in mind that in addition to, when you have that joint pricing structure for couples, you have built-in joint waiver of premium. So if, one spouse needs care, regardless of the venue, one spouse needs home health care, they go on waiver of premium, the entire premium. That includes the premium of the so-called healthy spouse as well. So, built-in joint waiver of premium remains with HonestLTC as well as the unique joint pricing structure. And then, of course, another thing that remains, and a lot of people like about NGL long-term care, is the third pool of money, right? So, a lot of carriers have a shared option, right, a shared benefit rider, and most other carriers, they build a bridge between one pool to the other. Well, with NGL, rather than a bridge, we give you tangibly more benefit dollars, a third pool that's equal to the two other pools. And that third pool does indeed inflate with whatever inflation option you may have. So, we are retaining that, and we're really going to promote a lot more, a couple other things that go along with the joint pricing and the shared benefit amount rider. So keep in mind that with the joint pricing, upon the death of one insured, the premium is reduced significantly. Obviously, if it was the husband that passed away first, it's not as much as a reduction as the other way around. That's where you'll see the gender-specific pricing into play. But keep in mind that the illustrations and quote do show what the ongoing reduced premium is upon the death of one insured. Additionally, if they do have that shared benefit rider, and let's say one spouse passes away without ever entering into that third pool, keep in mind that the surviving spouse keeps that third pool. So I have a little case study that I'm going to illustrate this in a little bit that shows that. But, that's kind of like a built-in survivorship benefit that, a lot of people don't know about. And again, it's kind of a cornerstone of this plan, and it really helps when you're talking to a husband and wife and you have, one spouse that's, I can't envision myself ever needing care. Well, this mini built-in survivorship benefit can be helpful in that regard. All right. The 10-pay option is kept with this plan. One thing that we do not have anymore is the single pay option. So with HonestLTC, there is the lifetime pay option and then the 10-pay, but no more single pay. So, again, last call, and we didn't really do much, single pay business to begin with. And in all honesty, I guess it goes with the Honest LTC name. For most people that would rather pay a single premium all at once. Well, listen, we all know there's some other really interesting long-term care solutions that allow you to reposition an asset. So again, with Honest LTC, you have the life pay and the 10 pay. Benefit periods. All right, again, this is where you'll see something that's not there. And as I said earlier, Honest LTC does not have the unlimited benefit option anymore. So we offer 2, 3, 4, 5, and 6 years. Now, this is actually, in a weird way, getting rid of the lifetime benefit period makes this product more competitive. And I'll show you why. And I'll show you why when we look at the rates, but I'll tell you why right now. By not offering unlimited benefits, the NGL has somewhat de-risked the product a little bit. Thus, the rates for the new product for Honest LTC are not as much as you would think, and they're not as the increase in Essential to Honest is not as much nearly as you'd think. For under the age of 70, for most benefit periods, you're only looking at an increase in pricing from 3 to 7%. Which is really good. I mean, most of the time when there's a new product that's released, usually a lot of people, oh boy, well, let's see what the pricing is going to be. And that's right, you're usually looking at 20% higher rates, and that's not the case here. So basically, we think the overall offering got a lot stronger. So it's almost like addition by subtraction. Elimination periods are still 90 and 180 days. I'm going to dive into this in a little bit. And we still have the first day home and community care rider, meaning 0-day elimination period for home care, which I think is going to be a really attractive option. It's already getting a lot of feedback that, wow, normally I would never quote first day coverage for home care, but given the pricing now, I'm going to start building it into my client presentation, and I'll explain to you why in a second. So let's talk about the enhancements, right? What's new with Honest LTC? So we kept, I think the cornerstones of NGL LTC, and we're adding the following enhancements. Obviously, the first one, is a big one. Rather than having a monthly benefit rather than having a daily benefit, or a lot of people call it a daily cap, we now have monthly benefits. Yep, I know it's about time. This is actually NGL's 10th anniversary in long-term care, and the original product was created when daily benefits were the norm, but finally we do have a monthly benefit, which is great. And we now will go up to $12,000 a month, which is also an increase in the old $300 a day max, which was $9,000 a month. So monthly benefits. Additionally, Essential LTC, the old product, had a service day elimination period. Well, we got rid of that, and now the elimination period is now what I will call the classic or original version of a calendar day elimination period. And let me explain to you how it works. And I know, a lot of people, confuse, terminology with how something works. So let me explain to you how this does work. So it is the original definition of a calendar day elimination period, which means as long as you receive at least 1 day of a service, and normally, listen, we're talking about home health care here. It's not like people go into facilities and are in and out. So as long as someone receives at least 1 day of, let's say, a home care service in a week, that counts as 7 calendar days towards satisfying that one-time elimination period. So, call it what you want. I know before, and Lynn knows I've been in this industry for a while. In fact, I've used to work for a long time at the company now known as Genworth or Care Scout. I'm not sure what it is now, but back then I remember this was I worked in product development. This was the original definition of a calendar day elimination period. So we're happy to have that. And also, I should let you know, and when you see the pricing, I think you will see that the 0-day elimination period rider is going to be really attractive. And keep in mind, when you do have that rider, days that would have satisfied an elimination period had you had one, on a 1=7 basis, do satisfy a subsequent elimination period if facility care is needed in the future. So I wanted to explain that. Right? Any questions? Do we have any questions so far, Lynn?
We did actually have one submitted already, and
okay.
the one that I couldn't answer was, have you applied for approval in New Jersey? So the HonestLTC, was that already filed in New Jersey? Do you know?
Yes. Yep. It sure is. It's filed. It's with the state insurance department. And I would hope we have approval. I don't think they've reviewed it yet. They take a while, but they're not crazy like California. So if I had to bet, I'd say 2 or 3 months in New Jersey.
Okay.
But it is.
And with these state approvals, we never know. But that was going to be another question that if one of our attendees did not ask, I was going to maybe try to get an inside scoop on when there might be another wave of approvals. Do you know if it's going to be when there's several more states that have approved it likely? And that could be just whenever that happens.
We're probably looking at like a small handful of states. And if I had to guess, again, this is just me, looking, at emails that come across my desk about, oh, we responded to the state about this or that. My guess is that the next wave would most likely include Massachusetts, Illinois, and possibly New Jersey. New Jersey, it just takes them forever to review, but once they review it, they get it over pretty quickly. That's that's kind of been the their MO. So that if I had to guess, that would probably occur. Those 3 states probably in the next 2.5, 3 at most months would be my guess.
Okay, so that just means keep your eyes on your inbox, everyone. There's going to be some exciting things happening over the course of the next several months.
Absolutely, yeah. It's it takes a lot of work, but we're really happy about it. All right, well, let's get so the enhancements I just described, I think kind of I like to categorize things, and I think that puts addresses what your average customer who's interested in a traditional long-term care solution, right? Pure protection. I think those 2 enhancements are important to people, and it falls under the category of stay-at-home insurance, right? And that's what people want, right? That's people really want the ability to avoid a facility and have that third-party checkbook and services to be able to stay at home and receive care in the home. And those first 2 enhancements fall under that. The next enhancement, I believe, aligns with NGL's mission to make long-term care protection more, I will say, attractive to the middle market, right? Because, I think, with the evolution of the industry and, the, multifunctional life insurance products that are available that allow you to reposition assets and whatnot, I think there is, become an incorrect assumption that long-term care planning is for just the rich only. Right, people, the middle market is, it has been priced up, but that's not true. So for number one, this is, pure protection, traditional long-term care insurance, which, it's a fact, is the most cost-effective way to plan against one thing, right? Long-term care. So in that regard, we introduced some new inflation options. In addition to the regular 3 and 5% that the old product had, we now have 1 and 2% and 4% automatic compound inflation for life. Now, I think this is important because number one, it makes it does add gives you added options for the middle market to put together a plan and that meets a particular price point. But you know what, Lynn, the importance of the state partnerships for
Oh yeah.
long-term care, and there are about 30 states that allow a plan that has just 1 or 2% inflation to be partnership eligible, right?
Yeah.
And that's important because that was the original spirit of the partnership program, right? That there are a lot of people out there that can only afford a limited benefit plan, whatever you want to call it, and we need to give them incentives to plan. That was the spirit of the original partnership plan. But back then they said they kind of shot themselves in the foot. But you're saying we got to make it legitimate. And make it truly meaningful. So any plan has to have at least some states said 5% compound, and then they added 3%. And you know what? Based on the reality, the fact now that traditional long-term care insurance is actually priced based on true experience data rather than the guesswork. Well, now it costs what it should. And by requiring someone to have 5% compound inflation, that goes against the spirit of what the partnership program was created for. So having just 1% allows someone to get that back end asset protection with the partnership program, which I think is really meaningful for a lot of people. So we're really happy about that. And then I will say these are client-friendly benefits, but they're also, agent-friendly benefits as well. So number one, we now have a 5% partner discount for individual applicants. As I said, we still have that joint pricing, which is a great value for couples. But what if, someone, they have a partner or a spouse at home, but for whatever reason, they're not applying? Is there any discount? Before there wasn't. Now we can give a 5% partner discount, which is really good. And then listen, this is my most favorite change right here. Rather than our insurance age being age nearest birth date, which the old product was, we're now age last birthday or current age, which is great. I mean, oh my God. Now on our quick quote software, you don't need to know the birth date. You can just put in an age and come up with a quote in seconds, which is great. I should also add that NGL automatically saves age if in the previous 30 days there was an age change. Their birth date was 30 days prior to the app date. NGL automatically will go back and save that age for 30 days. So I wanted to mention that. And then NGL, the new product, also has an alternate plan of care now. So if someone, if there's an emerging trend that develops that we don't yet know about in the long-term care provider system that, 20, 30 years from now, whenever, becomes a customary way people receive their long-term care services, well, now we have contract language that could pay for that. All right, so those are the enhancements. And Lynn, are there any questions about product before I dive into the pricing?
Well, someone did ask about domestic partners and whether the joint pricing applied also to domestic partners. it works in my mind just like it did on the Essential LTC, where domestic partners are given the same treatment as married couples. So I did go ahead and answer that in the chat, but there's been no other questions submitted beyond that yet.
Okay, great. And yes, you're exactly right, Lynn. Domestic partners do absolutely count for the joint pricing and the 5% discount as well. So great. Thanks for answering that. Now let's take a look at the pricing here. So as I said earlier, that the NGL with this product, our aim was to retain the competitive price advantage at obviously at our sweet spots. And you'll see here with what's on the screen, this is NGL's sweet spot. I mean, what you see here are a same age couple, male female couple, same age. With a benefit plan, with a plan designed of 3 years, $4,500 a month, 3% compound inflation, and whatever shared rider that carrier has. And again, this is the sweetest of sweet spots for NGL. And one thing I want to point out is when you look under lifetime maximum for each carrier here, you will see that the lifetime max with NGL is a third more. And that's because of the third pool. Like I said earlier, NGL's shared rider doesn't just build the bridge between two pools. It creates a third pool, which gives you tangibly more benefit dollars. And so at many ages, and again, depending on how close the couple is in age, right? If they're, if you have the husband, 10 years older, it's not as competitive as you see here. But as long as they're, close in age, it's really, really tough to beat NGL. And in many cases, you look and say, geez, you get more benefit dollars for less premium than, many of the other traditional carriers out there. So, again, this is the sweetest of sweet spots that you're seeing right here. I should add that NGL, underwriting wise, we still have one quotable rate class, which is Premier. Now, NGL does have available as a counter offer only. It adds 35% a standard rate class, but we don't put it out there on our software to quote, because really only about 1 out of every 100 approvals get rated for that counter offer. So it's the vast majority of approvals are at that premier rate class. So again, what you're seeing here for comparison purposes is for the two other carriers you see there is their most often placed rate class, which would be select or standard, so just a notch below their preferred. And both the other carriers you see there, you have 4 rate classes you can quote. So I just wanted to clarify that. Now, I want to take a look at the next comparison chart we have here. And this is the exact same benefits, but with the 0-day elimination period for home care rider. Now, as I said earlier, one major enhancement that we did make with this product is that it's a calendar day or 1=7 elimination period, as opposed to the old service day elimination period. However, a really cool byproduct of switching that is that the price of the 0-day elimination period rider has been greatly reduced. With the old product, that rider added 25% to the premium. Now, with HonestLTC, it costs only 10% more. Right, which is a very, very good deal. So, given the fact that this is traditional long-term care insurance and meant for just pure protection, maybe it makes sense to talk to people about hey, staying at home is important for you. Maybe let's look at immediate coverage. So if a long-term care event does happen, that on day one you're covered in the home. makes a lot of sense. And I'll even go back and let's take a look at age, the couple here, age 60, right? So without the rider, that couple pays $57.85. With first day coverage for home care, not much of a difference, just 63.63. So it's something something I think to look at when talking to people about HonestLTC.
I want to take a moment and just ask a
course.
quick question, Mike. Just for a point of clarification, these premium examples that have been on the slides, these are based on lifetime premiums, correct?
Are correct. Thank you. Yes.
Okay.
Yep, absolutely. These are not the 10 pay. These are the lifetime pay. And then here's another plan design. Again, taking out the shared care and just straight pool of 5 years each. Again, for same age couples or couples close in age, still really good value for NGL. So again, joint couples, are the sweet spot with NGL. Yes, in second place for the sweet spot are women applying individually or single females. So let's take a look at that. What you have here is 3 years, $6,000 a month, 3% compound inflation, and this does not include the 5% partner discount. So if the female here had a spouse or a partner at home, but for whatever reason they're not applying or ineligible to apply, the rates would be 5% less than what you see here. Right. And again, for single females, I think, it heightens the importance of, maybe talking about the first day coverage for home care. Right. Again, a single female may not have a built-in care support system readily available to help her out for the first 90 days of a long-term care event. So again, let's take a look here. At age 60, you're looking at about $4,900 right here. And then if you want first day coverage, geez, it only adds that 10%, now $53.87 for the peace of mind knowing that on day one she's covered in the home. So here is the same plan, 3 years with the 0-day elimination period rider. So already in the last 2 weeks that this plan has been available, a lot of people are applying for and taking a look at that first day coverage rider for home care. And then here's another plan design, 5 years, $5,000 a month, 3% compound, still looking, really good at 5 years. So, and again, I want to, reiterate that, under the age of 70, you're only looking at an average rates with HonestLTC, 3 to 7% higher than the old product. And again, a good, much of the reason for that is not offering the unlimited benefit period anymore. All right, so number 3 sweet spot are men applying individually. So we're still competitive there. It's not, the sweetest of sweet spots for NGL, but still, fairly competitive for single men. So I wanted to show that. There's without the first day coverage for home care, and there's with first day coverage for home care. And I will tell you, I've never seen, pricing, especially for single men, so uniform throughout the industry. So it's interesting. You take a look at these premiums. Wow, they're remarkably similar. Especially this single male 5 years, very, very similar across the board with the other 2 major traditional carriers. So those are the pricing examples I have. Lynn, are there any questions about the pricing?
There's another one that is related to the joint pricing.
Mm-hmm.
And they're asking about siblings. Do siblings get that same joint pricing?
So unfortunately, siblings do not. right? So I know that sometimes you have, you know, two sisters that live in the same home and share expenses, perhaps. But no, these two. This is two people, either domestic partners or married in a committed relationship that share a roof.
Okay.
So good question. Thank you for that. All right. So, like I said before, I'm going to do a quick case study here. That a lot of you may find oh, I know people like that, or I see I've seen someone who has the same attitude as these people. This is a very typical couple, I will say, a very typical Midwestern couple, Bill and Marie. All right, so we'll say Bill, recently retired. He retired, about 2 years ago, and guess what? He bought a boat, and he is loving it. He spends a lot of time on his boat, enjoying retirement, and his wife Marie still works part-time as a teacher's aide, but she loves it. So they're entering in the prime of their life. They have two daughters that live close by. They both have families of their own, and they're very grateful that they that their kids and grandchildren live in the same town, and they enjoy spending time with them. Health-wise, Bill, he had hip replacement just after he retired, so 2 years ago. And he takes the normal medications that most people in their early 60s take. And Marie, aside from a little arthritis, she's fine. So, they're both insurable. So that's good. And like many people, they had a horrible experience, long-term care experience with Marie's parents, who are now deceased. But it was a really bad experience that not only required them to help with caregiving, but they saw what it did to Marie's parents' finances. And so for years now, Marie has been urging Bill to go out and research long-term care. We need to get a plan, And for years, and many people can relate to this, because usually when you have a husband and wife, it's the wife that is the driving force behind the decision to purchase long-term care insurance. And you might say, well, why is that? Well, it's the females really that know what it takes to be a caregiver, right? And and listen, Bill, he's yeah, I know, I'm going to look at it, but he's very price conscious, right? But finally, Marie's had enough and said, Bill, you got to go do some research. So Bill says, all right, fine, I will. So where does he start? Bill asks his best friend, Ed. It's his fishing buddy, and Ed is an expert on everything. So one day they're out fishing, and he's talking to Ed, saying, "Hey, listen, Murray's really on me, to look at, to get long-term care insurance, and I don't think I'm ever going to need it. I'll probably die of a heart attack on this boat, but I understand it's important, and I want to make Marie happy. What do you know about this? Have you ever spoke to your financial advisor about long-term care?" Well, Ed says, well, yes, I did. Funny you mentioned that. About a year ago, I talked to my advisor, and he said that a policy is going to cost astronomical. It's way too expensive. $20,000 a year and upwards. He told me. Now, listen. There are products out there. There's solutions out there that can cost that much. So and mostly they're multifunctional life insurance products that do that. But some of them are great products. But listen, there are a lot of people for whom that's not an attractive solution. So, and Ed also said, oh, but my advisor said I could also do a one-time payment of at least $200,000, and then that would work too. But I wound up never doing it, is what Ed tells Bill. So then, of course, Bill says, all right, well, that's all I need to know. I'm gonna go back and tell Marie, no go. We can't afford that. And that's kind of what I thought, that this is just for people, wealthy people. So he gets back and Marie says, nope, I just got off the phone with my friend Penny, and they bought a very affordable policy through a nice Midwestern company called NGL. So I'm gonna hook you up with their agent, and he did. So they got what they wanted, and let's go over the details here. So, what they wanted was a meaningful plan at an affordable price that covers them both, right? Now, Bill, he's number one, he's most concerned about the cost. And, he's still not 100% convinced that he's going to need care in the future. And, a lot of men out there just can't seem to, envision themselves needing assistance in the future. And, that's just, the way it is sometimes. But he really liked the solution that the NGL product gave him. So here's what they wound up purchasing: 3 years, $4,500 a month, with that shared benefit rider, 3% compound inflation, and first day coverage for home care. The combined premium, $6,681 per year. 6681, that's really good. And on day one, it's almost $500,000 in coverage. And in their mid 80s, you're looking, it's approaching $1 million. So Bill is he can afford this. What he really liked about it was, number one, the built-in spousal waiver of premium, that the whole premium is waived if just one of them needs care. But what he really liked is that if he were to pass away and never needed care, right, or he needed just a little bit out of his own pool and passed away, then Marie, upon him passing away, Marie is left with a 6-year plan. Right, 6-year plan, because she has her own 3-year pool plus the third pool, and her ongoing premium is reduced down from $66.81 to $53.45. That's what did it. That's what did it for Bill. And then, of course, Marie really liked the first day coverage for home care rider that's included in this plan design. So that's my case study right there. And I think a lot of you guys can, relate to a lot of the themes in there, especially as it relates to just long-term care planning's just for rich people. It's way too expensive for my blood. No, it's not. I do urge all of you, HonestLTC is on the Quick Quote website now. So it's a really cool website that allows you, there's the address right there, and you'll see it when Lynn sends you this PowerPoint presentation, but save it to your favorites. It really, what I like best about this, 2 things. Number one, you don't have, there's no user ID or password required. That's what I love. Just, go and start quoting away. And then number 2, the output's fantastic in that the visuals, especially how it shows that third pool of money in the visually, is really easy to understand, really easy to explain to people. So I urge you to go onto the Quick Quote software. It's not so, it's a website. So go onto the Quick Quote website and do your quotes there. And I'd be remiss in not reminding you about the NGL long-term care story. Listen, this is NGL's 10th year in long-term care insurance. So NGL got in long-term care after the learning curve that the traditional long-term care industry went through. What that means is, it's good to be late to the game. And it certainly was here because, from inception, when NGL started pricing long-term care insurance, it was priced from the get-go on actual experience data, right? No guesswork. It was, true. There was a body of data from which to price this product accurately. And especially when it comes to the lapse rates. As many of you know, and I'm sure Lynn does as well, a major reason why, a lot of these older blocks of business, had such significant rate increases, because back then, in the late 80s, early 90s, up through the mid 90s, a lot of carriers were, basing the pricing off life insurance lapse rates. In fact, lapse rates for term life. And so a lot of those old blocks of business, they were assuming that, 10, 12, 15% of the people were going to lapse their policy, which is not correct at all. In fact, I think the actual true lapse rate with long-term care insurance is 0.6%. Whoops. So from the get-go, NGL was assuming lapse rates that align with actual, the true experience data. And because of this, right, NGL has never raised rates on in-force business, and we don't see it coming. We have no legacy risk pools to manage. And the AM Best is A. And then for those of you in California and have earthquake insurance, you probably know that, a very meaningful, important way to measure an insurance company's claims paying ability is by the risk-based capital percentage, and NGL's is 615%. So, which is really, really good. So I wanted to mention that. And then finally, quickly, because I think our time's about up, I want to urge all of you, and the reason we're here is because Americans are living longer than ever. And we're always talking about lifespan, and that's what we're telling people when we tell people they should plan. But we should also be talking about health span, right? What's health span? It's a number of years that you're going to live somewhat healthy, right? Free of chronic conditions. And the average age, when your health span starts to go downhill, is just under age 64. So I think the message here is that, listen, you got to talk to people about this while their health span is strong and their health currency is strong, because it's, your good health is what buys the long-term care solution. Money just pays the premium. And I know it's tough. A lot of people say, oh, well, hey, long-term care insurance, is available up to age 79. So I'll just keep putting it off. No, we got to be talking about health span instead. And then, and also Lynn will send this out to you. I always like to point out, choose your words carefully, because words do matter when talking to people about this. People still refer to this as nursing home insurance, which drives me nuts. I've been in, this business since, 1991. And a lot of my, close friends, a lot of my buddies still refer to me as Mike, the nursing home insurance guy. No. You call me the stay-at-home insurance guy. That's more aligned with what these products are supposed to do. And then I also think that many times we, dig ourselves a hole by, giving negative imagery to this sort of planning. Too often we say, oh, this is for when you become old, sick, and frail. Well, let's not talk about becoming old, sick, and frail. Let's talk about instead your health becoming compromised due to chronic conditions, and because of that, you need assistance. So I think that's a better way to talk about needing care. And then, of course, rather than say, well, you know what, something is better than nothing. As I said, a big part of this product, we're trying to reach the middle market. And, sometimes, you look at the cost of care study and say, all right, well, I'm going to quote you, an $11,000 a month policy, 5 years each. And then you wind up, they go into sticker shock, and you wind up, peeling benefits back. That's just a negative experience. I think it makes sense to maybe show a more modest plan, 3 years with the third pool, and say, listen, this, $4,500 a month, a little goes a long way, especially in keeping you in the home. And those of you that have had a caregiving experience, I think can relate to that. I mean, I took care of my grandmother for 5 years at the end of her life. And if someone would have given me $3,000 a month from a third-party checkbook to pay for a home health aide, it would have changed my life at the time. So, a little goes a long way when it comes to long-term care insurance. And then finally, I think a really good power question for this, is not, oh, do you have long-term care insurance? What do you know about long-term care insurance? No, it's what's your plan for when your health changes? That's it. No matter how they answer that question, it's going to give you a path, I think, to a very educational and meaningful discussion. All right. So with that, Lynn, are there any questions?
There are. Somebody had asked, actually two of them, about 10 pay. One of which is, does the 10 pay still have the 10-year rate guarantee? So I think they might be referring to the old, well, the essential LTC. I believe that's how it worked on the 10 pay. It had the 10-year rate guarantee along with it. Is that still the case on HonestLTC?
Yes, so I'm glad you asked that because I should have mentioned that when I brought that up. So the new product, HonestLTC, it was filed in the compact states with a 10-year rate guarantee. So it was filed with the full rate guarantee for the 10 pay and a 10-year rate guarantee for the life pay. The compact group of states came back and said, we will not allow you or further going forward any other traditional carrier to have more than a 5-year rate guarantee. So the new product, this HonestLTC, has a 5-year rate guarantee for the 10 pay and a 5-year rate guarantee for the life pay. We intended for it to be 10 years, but due to regulatory requirements now, they won't allow anything more. So
Wow.
so that is the answer. So NGL has no plans to raise rates, obviously, but hey, a 5-year rate guarantee on both is still pretty good.
It is. It is. And there's still a rate guarantee as part of this, which, I mean, and HonestLTC has not yet launched in all states. So there is still that chance for the fire sale in the remaining states that have yet to launch the new product. But that's one of the another one of those compelling things about why Essential LTC might still be a great option. Not only is it the unlimited benefits, but the single pay option as well, and then also that 10-year rate guarantee. Wow. Okay, so the next question about the 10 pay, is there a 10 pay case study? Now I know you went over the okay, so you went over the case study where it was the lifetime premiums. Is there a 10 pay case study? Maybe something that we might be able to share after the webinar today?
So you know what? We do not have a 10 pay case study. That's something we may do in the future, but we don't have one. But it makes sense maybe to do that because I will tell you that the 10 pay rates on HonestLTC compared to the essential, the rates actually decreased. So due to economic conditions, and keep in mind, this is traditional long-term care insurance, which is, health insurance. So as it relates to a 10 pay, especially, health insurance companies don't, I would say health products don't have the luxury of having the sliding rate scale of just at any given time, like a lot of these hybrid products do. Oh, we're lowering our rates or we're making them higher on a sliding basis. Health products. You can't do that. You have to go back to the state insurance department every time you're going to do any sort of rate adjustment. As such, economic conditions since the last time we priced at 10 pay were dictated that the 10 pay rates could go down. So when you're doing your research and pricing it, you will see that the 10 pay rates are actually less than with the new product than they were with the old product.
Good deal. And you did mention earlier during the presentation that HonestLTC was a bit de-risked by the fact that there's no longer those unlimited benefits. So that might play into things too. Mm-hmm.
Sure.
All right. So there's commentary. Bill Bill, oh, from your example, Bill doesn't comprehend the plot. LTC is an investment in an important asset. You, the person. Ray, that is absolutely true. Very, very good. Some of us have been around a long time and experience shows. Um,
Absolutely.
oh, Ray had another comment too. People complain about premiums. People are paying a lot more for car payments. I explain that to get people's perspective that you are willing to pay more for your vehicle than you are for yourself. Posing that as a question, it is. It's all about perspective. And, just like Mike, the storytelling of that case design, I encourage everyone to share stories. There's so many caregiving experiences, and it's not easy. Caregivers, there are so many more now than there were even 5 years ago. Share your caregiving stories. Storytelling is important. Long-term care insurance, and by extension, all extended care planning, it's all an emotional sale. And if you're able to tell a story, and if the clients are able to relate, or even if it even brings up memories of their own, I mean, that can be a pretty powerful step in the right direction.
You're so right, Lynn. Absolutely. It's one of the, like, you nailed it. I mean, it's one of the most emotional financial products that people will look into.
Mhm. Well, I'm scrolling through and I don't see any other questions yet. So yeah, I think we wrapped up in a very good amount of time. This was very, very good. Thank you so much, Mike, for coming on and sharing the details about this new policy. I'm excited to get things started, and Mike's contact information is there. Of course, any of you on today, feel free to reach out to Golden Care for any of your quote needs. We can certainly run Honest LTC quotes. We can do LTC comparisons using our StratDecision tool. Whatever the case may be, reach out and contact your Golden Care marketing team. We're here to help you get started. We're here to help you build your business, and we're here to help you succeed. So our number is 1-800-842-7799. And don't forget to visit our website, which is www.goldencareagent.com. There's a ton of resources and information out there too. So thank you everyone for taking time out of your day today. Again, thank you, Mike, for coming on and sharing this information. Everyone, be on the lookout for the follow-up email. It'll include some different links out to that quoting platform and some different things. So be on the lookout for that as well. I'm not sure if it'll go out yet today, potentially tomorrow. But then, of course, if you have questions, feel free to reach out and get in contact with us, with anyone at Golden Care, or Mike directly there by his contact information. Thanks so much, everyone.
Thank you, Lynn.
You're welcome. Have a great rest of your day.
Check out our website, goldencareagent.com, or give us a call at 800-842-7799.